Good morning, Jackrabbit Club, and I hope you guys had a great week. We're going to take a look at the portfolio for week ending Friday, July 21st, 2017. As I said in the earlier video, very happy with the way the market has been reacting, and even more happy with the way the portfolio has been performing. We continue to make new highs. We had some great moves in Netflix this week. As a long-term trader, I do hold through earnings. As you can see, I don't even know when the earnings are. I do. I shouldn't say I don't. I do know when they're upcoming, but I don't have them listed on the bottom of the chart like I do on the daily. Okay, here they are on the daily. You can see. This is Netflix, but see that nice big move. But they're listed on the daily. They're not listed on the weekly. And for me, it's just another thing that I have to worry about that I don't want to worry about. That's really the reason. As a long-term trader, I have no choice but to hold through earnings. Okay, whether it's good or bad, Netflix is good. Other ones maybe not so good. Maybe I could have been down 10%, 20%. But that's just the nature of holding through earnings and the nature of being a long-term investor. So, Mark, as I said, the portfolio has been acting very well. We are up 10.48%, and that is actually open profit. On the year, I'm up 16%, as I said in the earlier video. Let's see, where did that go? Here it is. Green line being my daily trading, blue line being my weekly trading, and red line being the S&P. So up 16%, up 9, up about 3. To put a lot of effort every day into a system that gives me 3% versus a system that I probably put, I don't know, maybe at max 20 minutes if I wasn't doing the videos, 20 minutes in every week, and getting a 16 versus 3% gain. Well, it's pretty cut and dry in my opinion. But as I said, up 10.48 in open profit. And the one thing that I did do this week was I cut Netflix. I took half off on that big earnings move. I took half off, and we're up 28% on that. On the remaining half. So again, that was an oversized position, and it is what it is. So let's take a look through the stocks or the positions themselves. Let's start with this account, Amazon. Okay, Amazon continues to work. I'm in the wrong thing. That's why nothing is showing up. Here we go. All right, Amazon continues to work. You can see there all the areas I've trailed stop to. Last week we trailed to 965. Sure enough, this week we have a new breakout. So the idea would be is, can I add to my position? Well, if we look back at what we had originally, 886 to 833, okay, that was a $53 stop. Now we're at 1025 to 1065. All right, so that is 35 and 25 at $60. All right, so it's a $60 stop versus a $53 stop. If I can add, my account has obviously increased in value from March to now. But if I could add, I may add 1 share, 2 shares. But of $1,000 stock, it's adding some type of risk to the trade. So I'll have to calculate that based on my portfolio value, and you'll have to do the same. But for all of these trades, I'm essentially risking 1% of my portfolio. That's just the way it works out. And, if 1% means I can have 7 shares versus 5, then I will try to accommodate that. AVGO, all right, has pulled back. We talked about this lower high, that being broken last week. Sure enough, came right back to the highs. But, can't add to the position. But what I am going to do is go ahead and trail that stop up to the latest closing low, which is around 232.74. And this one becomes gray. And I like to keep them gray just so I can see when the trade's over, how I managed it in real time. Berk B, all right, pulled back, broke out, added it to the position multiple times. What's it doing now? It's just going sideways. All right, so if we can get another breakout over 171, then I will trail stop up to 167.23. All right, that's it. Next, very simple, very straightforward, same thing every time. Again, not sexy but effective. Here, DHR, I think they actually had earnings this week. Yeah, they did. All right, so again, as I said in the previous video, I don't even know when the earnings show up. I don't have them listed here, but they did have earnings, or actually I think I said that earlier in this video. But they did have earnings, big gap down, worked its way back, and the reason for this big candle went from 85 to 81, but sure enough, look at where they came into. So if, again, on my daily side, if I was smart and in tune with the market, probably could have bought some options, some call options at the 81.50 area just to ride that trade back up. You know, you can see that level right through here, but again, it's hard. I'm not gonna lie to you. It's hard to be so in tune with the market when everything else is going on a daily basis. You know, I have a full-time job, you know, and it's not possible for me to really sit there and watch the markets all the time. So this is why the weekly system really works for me. And I'm doing it, you know, it's 10 o'clock on Friday night. You know, I have exciting nightlife. But this is what, you know, makes this system so great, is you could do it when the markets are closed. Microsoft, another breakout last week, another continuation. We've trailed stop to 68.12, and you can see that, I mean, the trade's just working out great. RTN continues to move higher. You know, again, not much else to do. It's moving higher. I don't have to worry about it. UNH, all right, we trailed stop up in UNH to 185 because I said, you know, position was starting to get not necessarily oversized, but it's had a hell of a run, and you can see that it hasn't broken below a previous or it hasn't closed below a previous low for the last let's call this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks. All right, and now we have this big candle here up to 191. Wouldn't be surprised to see 200, and honestly, I'll probably take a little bit of profits at 200 if we can get there, just because it's a round number. Traders think, hey, 200, that's a round number, that's a psychological level, and if I can get to 200, maybe I take half off and then see where we go from there. But you know, I have a lot of open profit. I want to start taking it. I don't want to see it disappear, and you know, I got to start one way or another taking some of that risk off the table and really locking in those gains. Last win after a few weeks of a pullback, now a little bit of strength, and sure enough, that strength comes. If we draw the line right at the previous resistance, okay, and you know, again, it doesn't have to be complicated, but you know, again, not much to do there in win. Let me find the other one. Here we go. BBY. All right, now this is what always gets me. This is one of the things that constantly bothers me, and I never really know the right thing to do. So first and foremost, my stop was 54.63. Call it 54.50. Last week, stock broke below, closed back above. All right, the low of last week was 53.01. The low of this week was 52.97. 4 cents different. All right, and has worked its way off. If you look at the daily chart, I'm sure it looks ugly, and it does. All right, but what do you do? Well, if you're following a process that says you got to be out at a certain level, then you got to be out. All right, I should take my small gain here of 54. What did I get in at? 50, 54, 40 shares. So take my $160 profit and move on. The other thing I can do, and probably the thing I am going to do, is I'm going to watch these lows here. All right, 1 and 2. Just because they're so close, I'm actually going to put a stop order in. So if it goes below 53, let's call it 52. Let's call it 52.90. If it goes below 52.90, it goes to 52.89, I'm going to be out. All right, so I'm going to give myself a little bit more leeway. I'm going to allow, because I have some profits in the trade, I'm going to allow some of those profits to get eroded, because if I take 160 or if I take 100 out of it, it's not going to make or break me. And let's see if this thing actually does turn around and start moving higher. If it doesn't, then I'm out. All right, so sometimes having a process is, you need it, okay? But you have to know when to kind of bend the rules a little bit. And because of these two wicks that are, these two candles are identical. If you look at this, right? 56.50 to 52 or 53. It doesn't get any closer than that. So in that one, I'm just going to go ahead and set that stop. DGX continues to hold the stop level at 107. And again, this is one that has had a solid run. And, under 107, I'm out. DHI had a nice move this week, came back, tested the bottom of this candle, and bounced. FedEx finally broke the streak of lower highs and lower lows. Higher highs and higher lows. Again, not breaking the low of the previous candle for a good period of time. But this is early in the infancy of this trade, and my strategy says, not to take half off. All right, I'm not looking to take half off here. I'm looking to see what happens. I'm looking for it to establish another consolidation. I'm looking for another breakout, and I'm looking to add to my position. If it doesn't, my stop is all the way down here at 187. That's what'll happen. I'll get out at 187. I'll take a winner to a loser, just on premise of following my process. GLW, all right, just continues to work higher. This one's starting out very well too. See where it goes. HIG continuing higher. ICE continuing higher. All right, ITW. All right, ITW is one that we took half off. All right, just based on the size of the position, I was uncomfortable having that type of size. Took half off. All right, and then it's consolidating. So if we can get a breakout back above 149, then I'll look to add to the position. All right, and put the other half back on. JPM started out well, came up, hit this resistance around 94, has pulled back, but as I said, look at that XLF. It's consolidating right below breakout, and if that turns around, then JPM is going to turn around. And finally, Netflix, just a monster week. All right, from 147 up to 188. Even the high of this candle was 191.50. So you got to take profits. You got to take some kind of profit on a move that takes you up almost $40 on a $147 stock. Call it 20%, call it 25%. A 25% move in a week and a half, 2 weeks, 3 weeks, whatever you want to call it. You gotta take profits. All right, so you gotta take something. I took half. I'm gonna let the rest run and see where we go. I didn't do that in BBY, and look at what's happened. I had this huge move. Ideally, I should have taken half. All right, and looking at it now, hindsight being 2020, I had a move that went from 50 to 61, 62. All right, at some point in there, I should have taken half off. All right, it was a 20% move in a week. Take the money. All right. Other than that, not looking to add anything. I don't think. I'm actually looking to start taking money off the table instead of putting money on the table. Just because of the run we've had, I want to obviously stick with what's working, but not looking to add anything. So that's how I'm managing the portfolio this week. Again, I'm not looking for these to be entertaining. They shouldn't be necessarily entertaining. They should just walk you through how well defined of a process you need to have to be successful. And again, it doesn't have to be hard. Look at my process. I'm drawing boxes and lines and moving lines around. That's all I'm doing. I don't have 1,000 indicators on the screen. I have nothing, and it works for me. So I hope it works for you as well. Other than that, again, have a great rest of the weekend, and we'll catch you in the next one. Take care.